Fed Chair Jay Powell says he will not resign if asked to do so by Donald Trump as the central bank delivers a quarter-point rate cut. Now, the president-elect picks Susie Wiles, one of the top architects of his presidential campaign, to be the first ever female White House chief of staff. Plus, China unveils a $1.4 trillion program to refinance local government debt as Beijing rolls out more measures to support a slowing economy facing new risks from another Trump presidency. Now, we do have some big interviews coming up this hour. We'll be joined exclusively by Ales Michl, the Czech central bank governor, as well Mark Sedwill from the UK, former national security advisor. Now, a lot of the focus, of course, on the Trump presidency, what it means in terms of tariffs, trade, what it means in terms of policies, and the fight possibly with the Fed. Now, European stocks are pretty much unchanged. It's been a very big week in terms of volatility and in terms of positioning after the Trump election. S&P futures, you can see practically flat. The U.S. 10-year yield 4.2946. Again, when you speak to a lot of market participants after this initial stampede into the Trump trade, I think a lot of people are just taking a bit of a breather, taking a pause to see what happens next. Euro dollar 107.80. We also spoke to Andrew Bailey yesterday, so we'll bring you that interview in terms of what that could mean for sterling. And then iron ore is, of course, a China play, and it's down almost 3%. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Happy Friday. It's been a big week. It's been 2 days since Donald Trump won the U.S. presidential election, and he's already building his cabinet. Now, Trump has picked Susie Wiles, one of the top architects of his political campaign, as his White House chief of staff. Policymakers are now trying to understand what some of his policies could mean for the U.S. and the rest of the world. So let's bring in Tina Fordham, founder and geopolitical strategist at Fordham Global Foresight, and Rachel Evans, Bloomberg's managing editor for FX and rates. So thank you both for joining us. I mean, Tina stopped sleeping on Tuesday, waiting for the election, and you look awake and fresh, actually. Rachel, when you look at the Trump trade, and this, I think, is what the market is very telling, because they went all in, and now they're pausing and saying, well, actually, we don't really know what happens with trade. We don't really know what the tariffs look like. And so they're taking a little bit of a breather.
Exactly that. And I mean, you always see this whenever there's any big catalyst for markets, that everybody piles in, gets their trades going, and then there's just a little bit of kind of a pullback. Maybe you take a little bit of profit, maybe you take some money off the table and wait to see exactly what the detail is going to be, because we have kind of sort of the sort of broad scope of what we think a Trump presidency might look like, and he's talked a big game around some of those policies, putting quite big numbers around sort of the likely tariffs that he thinks he might be able to put on countries. But we don't actually know how much of that is going to come to pass. And we also don't know the exact composition yet of Congress, which will obviously bear a lot of importance for how much of those he can actually get done as well.
What do we know, Tina, in terms of, so we have the chief of staff now, the first female person to be in that role?
What else do we know about his team?
Of who he could pick, or even the chief of staff?
This is just starting to evolve. I mean, I think there are questions about Elon Musk. Can he be this head of government efficiency with a giant axe swinging at government entitlement programs? Because will his shareholders allow him to take that role? So at the moment, there's a lot of digesting about what Trump has said and what he can actually do, who will be around him. Remember that during the election campaign, most of the people who had worked closely with him said that they didn't endorse him, let alone put themselves in the running. But, of course, he's now going to be swamped with people who want to be part of an administration that has no brakes, right? Control of Congress and the White House.
But, Tina, so we don't know what happens to the House yet, right? So there's the White House, there's the Senate. Yes. You think it goes Republican. Yeah, but is there, I mean, what kind of team will he build, right? Because policies will be different if it's only Trump loyalists or if it's business people.
Well, so will Trump be magnanimous in victory, I think is what you're asking. And we haven't seen enough to know whether he's going to change his tone. But I think that it's loyalty is what Trump prizes most. Will he bring in expertise? I think that depends a lot. I haven't seen a lot of names for Treasury Secretary, for example. At the moment, there is so much euphoria, but there has to also be some consideration about the reputational risks of being associated with an unfettered Trump administration, I think.
Rachel, one of the other questions is, of course, what he does with the Fed. I mean, there's talk, Fed independence. Does he actually get much more involved? He gave this interview to John Micklethwaite where he was pretty unhinged, even saying that actually Jay Powell doesn't work very hard. So Jay Powell yesterday cutting interest rates by 25 basis points, and he was asked on this very point. This is what he said.
Some of the president-elect's advisors have suggested that you should resign. If he asked you to leave, would you go?
No.
Can you follow up on, do you think that legally you're not required to leave?
No.
Do you believe the president has the power to fire or demote you, and has the Fed determined the legality of a president demoting at will any of the other governors with leadership positions?
Not permitted under the law.
Rachel, it looks like Jay Powell's here to stay until his term ends.
Yeah, I mean, he certainly came out swinging in that press conference, didn't he? I mean, we're so used to seeing central bankers being very considered, slightly academic, kind of dry. So for him to be so blunt in his kind of assessment of what he would say if asked to resign and the legality of that situation, I thought was pretty noteworthy. And I think it speaks to just how much that kind of question of Fed independence has kind of been looming over not just Powell, but markets more generally. I mean, if we think about the US as kind of the ultimate haven, it's the driver of the world's economy, it's the kind of linchpin of financial markets, it needs to see kind of Powell kind of coming out and sort of being strong, and the Fed as an institution being protected. And it sounds like Powell is going to very much do what he can to at least make sure that Trump doesn't have undue influence over his organisation.
So the theme of this week was definitely bond vigilantes, kind of, already telling the Trump administration, please don't spend too much or there's going to be trouble ahead. But also this dollar rally. What does the dollar look to next?
Yeah, I mean, we've already seen the dollar moving to a one-year high off the back of kind of the election results on Wednesday. We've seen that ease up a little bit yesterday since then. So there's going to be a question mark about how much you can see the dollar rise when you have a Federal Reserve that is still going to cut. We are not necessarily seeing as significant interest rate cuts priced in as perhaps we were, a few months ago. But we're still looking to see, another 3, maybe 4 cuts between now and the end of next year. So that could still potentially mean that the dollar has room to run if we don't see those cuts becoming more necessary and seeing them kind of getting deeper. That would obviously be a weakening impact on the dollar.
What are you expecting in terms of first policies from Donald Trump? Is it immigration? Is it tariffs? We heard already a couple of things on Ukraine.
Yes, well, and there are a lot of things that Trump has said he would do on day one, right? Mass deportations, I think, is going to be very high on his list. But it will take a long time to achieve what he has said he will do. I'm talking about millions of people. But linking back to the central bank point and inflation, we know that Trump's policies are inflationary. And I think that takes us back to what is going to be a tension in the markets going forward. Mass deportation is going to drive up prices for food, among other things. And at what point does the market optimism about all those rate cuts that you mentioned actually start to get, blunted by reality? This is what we are talking to clients about most. How long can the sweet spot in markets last? Because the things that Trump has said he will do are going to drive up inflation. That tension with Powell is going to be acute. And don't forget the policy that they announced about a shadow chancellor idea like we have in the UK, a shadow central bank chair.
There's a lot to unpack. Tina, thank you so much. As always, Tina Fordham, Geopolitical Strategist, and Bloomberg's Rachel Evans stays with us. Coming up, China unveils a $1.4 trillion debt swap to support a slowing economy, with all eyes still firmly on Donald Trump's plans for tariffs. We're live in Shanghai with the latest next, and this is Bloomberg. So China has unveiled the $1.4 trillion program to refinance local government debt as Beijing rolls out more measures to support a slowing economy. Now, for more on all this, let's get straight to Bloomberg's Charlie Zhu in Shanghai. Charlie, this seems to be at the higher end of what we expected. How worried are they about the economy?
Yeah, but to be honest, I think the market is a bit disappointed by the announcement. The 10 trillion figure is at the lower end of expectation. There's been a lot of reports and speculation that the stimulus will be 10 trillion or at least. And today, what they announced is it's going to be 6 trillion yuan over 3 years, so 2 trillion yuan each. And the finance minister also said that the government will be able to issue another 4 trillion yuan and spend it over 5 years' time. So if you look at the market, the investors are a bit disappointed. Yuan has weakened slightly against the dollar. The offshore Chinese equities futures also dropped. Copper has also fallen a little bit. Actually, there's been a lot of speculation about the size of the stimulus. Since the finance minister Fuan announced earlier this month, last month actually, that China will be launching its biggest effort in years to address this local government hidden debt issue. And also the figures were being mentioned in analysts in the reports and also local media. So, but again, 10 trillion sounds like a lot, but it's only less than 10% of China's GDP, which is more than 130 trillion yuan.
And Charlie, I imagine, and I know investors have been waiting for a kind of big bazooka, and that was very long in the making, because if you stimulate too much on the old economy, then it's very difficult to transition to the new economy. With Donald Trump now in the White House from January 20th, what more can we expect in terms of policies?
You're right. Donald Trump's he's threatening to increase China's tariff to 60%. So that's definitely complicating Beijing's economic agenda. Yesterday, the market rebounded very sharply because of speculation that China will have to come up with a much bigger than expected stimulus to counter the potential fallout from the higher tariff under Donald Trump. But anyway, we don't know how much more effort China will be making to address that issue next year. The main thing probably investors will be looking at will be March next year, when China's legislators will gather in Beijing to review the country's GDP target and also the fiscal deficit ratio, which is at 3%. There's been a lot of expectation China will have to raise that to 3.5%. to raise the GDP, the fiscal deficit to more than 4.5 trillion yuan. And that's only part of the measures to address the problem. The main thing dragging Chinese economy is consumer spending, consumer spending, and also the property market, which has fallen sharply. Government is not, it's under a lot of debt pressure because they have difficulty selling the land, which used to be the main source of their funding.
Charlie, thank you so much. Our Shanghai Bureau Chief there, Charlie Zhu. Now, in a moment, we'll speak to Andrea Felstedt from Bloomberg Opinion on China's shrinking luxury market, certainly when it comes to some of the luxury good makers. But first, let's get back to Bloomberg's Rachel Evans. Rachel, again, we're in this situation where we're trying to figure, some of the tariffs. I don't know whether we assume that Trump definitely goes after China first.
It seems likely, doesn't it? I mean, everything that we've heard in terms of kind of rhetoric around tariffs seems to be kind of directed very specifically towards China in particular. And I think the fact that he's kind of put a number on those tariffs for China, around 60%, as Charlie was saying, it does suggest that there is kind of more of a sort of policy thought behind, tariffs for China than perhaps elsewhere. And I think we also saw that in his first administration, that it was about kind of countering sort of China's challenge to US power more generally that seemed to kind of motivate some of those trade policies. So, I think, you sort of see the impact that the stimulus today measures have had on broader markets than just Chinese markets. I was looking really kind of at the Australian dollar, which took a hit down from this as well. It just sort of shows you that this is not just a Chinese problem. What happens to China and Chinese growth really matters for the rest of the world and for the global economy. And I think that's going to be something that we need to watch quite closely, depending on kind of how much of that Trump Trump rhetoric kind of becomes reality.
Yeah, and China's really been a downbeat for a lot of luxury goods companies. Cartier owner Richemont joins luxury peers LVMH in caring and feeling the pinch for more cautious shoppers in China. So we're also joined by Andrea Felsted from Bloomberg Opinion. Andrea, first of all, China is extremely important to a lot of these big companies. And I think even Hermes, the gold standard of luxury, took quite a hit in China.
Exactly. I mean, China has been the main driver of luxury demand, really, for the last decade or so. Over the COVID period, the US stepped up, but really China is so crucial for these companies, and that's really what hit Richemont, particularly in the watches. Watch demand in China was really what affected them today.
So what's going on in China? I mean, this is not anti-graft, right? There was a period where the government basically said, please don't show off too much if you have wealth. Please don't give expensive gifts. This is because the economy is not doing well.
Exactly. It's really about consumer confidence, the negative wealth effect from the property situation. There is a bit of a concern over the luxury brands that there's a bit of a turn-off from Western luxury because prices have gone up so much. That has, deterred consumers. Particularly, we're seeing things like slightly different market. We're seeing in cosmetics, there's been a big shift towards native brands, which are seen as more affordable and more in tune with consumer taste. We're not seeing that so much in luxury, but it's a bit of a warning as to what might happen.
So, Andrew, for a lot of these luxury companies, including Richemont, do they then try and get the consumer in the US?
Exactly. Exactly. Now, the problem is the US market hasn't been on fire either. So you had the two big engines of growth slowing. With China depressed, they will put more emphasis on the US. We don't know what the new administration is going to mean. Tax cuts could be positive, but then again, if tariffs were to be put on luxury goods in some way, that would be very bad. One thing Richemont was saying was that one thing we haven't had that a lot of people were expecting was this uncertainty. We know what the result is. There isn't a period of uncertainty. That's one the kind of silver lining going into the holiday season. We've got a decisive outcome. Then we go into the holiday season. That could be quite good for luxury. And another thing is with China, weak, if you're after one of those items that is perhaps been capacity constrained, a Cartier watch, or an Arpels necklace, a Cartier love bangle, you might have more chance of getting it this holiday season because there isn't that demand from China.
There you go. I mean, it's bringing back memories of actually Emmanuel Macron inviting Donald Trump, I think, to like a military parade to make sure that the Dior handbags wouldn't be taxed more than in the past. Andrea, thank you. Andrea Felsted from Bloomberg Opinion. Now, one of the top earnings stories in the U.S., Airbnb giving up gains during its earnings call. It's rallied, saying it expects fourth quarter growth in nights and experiences booked to be higher than the third quarter. Airbnb down 4.8%. Coming up, we'll bring you more of our interview with the Bank of England Governor, Andrew Bailey. We'll get back to Rachel Evans to understand what this all means for gilts, but also sterling. That's next, and this is Bloomberg.
There are a lot of uncertainties out there, both in the world and there's domestic uncertainties as well. So we've emphasised the word gradual again because we're going to have to take account of how those uncertainties play through. I'm not really in a position, any of us are in a position to say, well, gradual means every so often. That is not a judgment that we make.
But it's a judgment that the markets are making. So if you take away any major shocks, does it seem right?
Well, I think the markets have made that judgment. I think it's a reasonable reflection of the forecast that we've published today, by the way, but which is, by the way, conditioned on the market curve. So it's a reasonable sort of reflection of that judgment that we think inflation is going to come back to target sustainably within the sort of horizon that we look at.
Governor, the Chancellor said she spoke to you at the IMF, also about the budget and some of the things that were coming up. Did you warn her of market volatility or what the market would do?
Well, we talked at the IMF about, I think the Chancellor said, we talked about the IMF about her evolving thinking about the budget and her evolving thinking about the fiscal rules. We have, by the way, we have a very regular dialogue. I'm on my 6 chancellors since I was appointed, 5th since I started, and with all of them, we have a very regular dialogue. So Chancellor and I do that. So we talked in Washington about how evolving thinking about the budget, about the fiscal rules, and I think the Chancellor said, we talked last week about markets. She asked me for my assessment of markets. As the Bank of England is, we provide the Treasury with our assessment because it's obviously something that we're very close to. I'm very, very open and willing to provide that assessment. So yes, we talked through the assessment of markets.
Some of our interview there with the Bank of England Governor Andrew Bailey after yesterday's rate cut. Let's bring back Rachel Evans. Rachel, I mean, the main key takeaways are that they have to grapple now with an inflationary budget, but also, question marks over Trump tariffs.
Yeah, they have this kind of push-pull effect, right, of kind of, the inflationary budget, potentially meaning that they have to keep rates higher for longer, but then also this kind of unknown of tariffs and what that will mean for the UK. I do think it's interesting, though, that the UK, as a very services-led economy, is perhaps more ring-fenced than some others in Europe from those tariffs. And we have seen kind of the pound doing pretty well off the back of, a rate cut. You should see the pound fall. But just given it has the potential for the BOE to, as we were talking about, going gradually, maybe they're not going to be as hit by tariffs. Like, the UK is starting to look again, despite last week's sell-off, a bit like an island of stability.
There you go. Thank you so much, as always, Rachel, for joining us. Rachel Evans there, who, of course, heads all of our FX and rates coverage in the US and the EMEA. Coming up, our exclusive interview with the Czech Central Bank Governor Ales Michl after the bank cut its key interest rate for an 8th time. That's next, and this is Bloomberg. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. The Fed Chair, Jay Powell, says he will not resign if asked to do so by Donald Trump as the central bank delivers a quarter-point rate cut. The president-elect picks Susie Wiles, one of the top architects of his presidential campaign, to be the first-ever female White House chief of staff. Plus, China unveils a $1.4 trillion program to refinance local government debt as Beijing rolls out more measures to support the slowing economy. Now, the Czech central bank signaled it's moving closer to pausing a series of interest rate cuts as concerns about inflation risks prevail over a worsening economic outlook. While the Czech National Bank Board weighed a sluggish recovery against accelerating price growth before it lowered the benchmark rate to 4% yesterday. I'm delighted now to be joined exclusively by the Czech Central Bank Governor Ales Michl. Thank you so much, Governor, for joining us here on Bloomberg and on The Pulse. How close are you to actually halting interest rate cuts?
So good morning, Francine, and thank you for having me. So let me start with the big picture. When I became governor 2.5 years ago, inflation was at the highest since the change from communism to capitalism 30 years ago, and inflation was 17.5%. So we managed to reduce it to exactly 2% at the beginning of this year, and right now the rates are 4%, and we are saying we still have to be restrictive. So austerity is good. Austerity keeps core inflation, I would say, very low. It's necessary to keep core inflation very low, and that's the only way how we can keep overall inflation low in a small, open economy like the Czech Republic.
But, Governor, if you look at many places in Europe, inflation is nearing 2%, but there are certain pockets where there's persistent, sticky inflation, this like inflationary risks. Where do you see them?
Yeah, and that's the case for the Czech Republic as well. So we were among the first countries in Europe to achieve the exact target of 2% of the inflation at the beginning of this year. But inflation is not that. And I would say that our problem was that before the COVID, interest rates were close to the zero for more than 10 years. And too much money was created in the economy. And that is the reason, or that is why inflation pressures are, I would say, very persistent, or the inflation is persistent. And I think the policy mix for the future should be, firstly, keeping interest rates higher than before the COVID for the next 10 years, I would say.
So higher for longer?
Higher for longer. And secondly, which is also important, governments must balance their budgets. Because if they don't do it, I think there could be a risk of second wave of inflation. And another cost shock could be like a trigger for this inflation.
But Governor, it's difficult because actually, so if growth is hurt because of too restrictive monetary policy, then that will lead to social inequality. But you also have to fight inflation. So what's the lesser of two evils?
Yeah, maybe Milton Friedman compared inflation to alcoholism, and I agree with that. And the story is like that. When you drink too much or when you print too much money, then bad effects come later. But by that he meant inflation. But for the treatment, the opposite is true. So the bad effects come first. That's the recession. Okay, must be. But positive effects come later. That's it.
So can you talk us through your thinking in terms of you're already discussing when to halt rate cuts. When could that come?
Right now, core inflation in the Czech Republic is 2.4%. And we are saying that for the future, for the small and open economy, it's necessary to have core inflation slightly below 2%. It's not in our outlook. So that's the reason why we are already discussing when to stop the rate cutting process.
What's the right way to proceed with that? I mean, could it come as early as mid next year?
We will see. No timing, no guidance.
Governor, I mean, we're discussing a lot the potential of extra tariffs from the U.S. under President Trump. The Czech economy is also very dependent on car sales, and that's slowing down in Europe. How concerned are you about tariffs from the U.S. and car sales?
Yeah, it could be the problem for us, for the Czech Republic, and I expect some creative destruction in automotive industry in Europe, and I'd say that the largest and most famous automotive company in the Czech Republic is Škoda Auto, part of Volkswagen, and I think that they made a big mistake by focusing only on following EU targets and dreams of regulators instead of competing with Tesla or Chinese cars. So I think maybe automotive sector will be like a sad example of how regulation can harm the industry, and we as a Czech National Bank must set some example. So that means that we have to be more pro-market. And what does it mean? It means that, for example, we reduce our workforce by 5%, and we will introduce a program to cut red tape, but we have to stay strict, and at the same time we will keep a same level playing field, I would say.
Governor, talk to me about gold. I mean, you've significantly been increasing your gold reserves. Why is that, and how much more will you buy?
Right now you are smiling, so you like the gold.
Well, I mean, you've probably done pretty well on the gold reserves, right?
Yeah. So we are buying gold to diversify our foreign exchange reserve. Currently, we have 140 billion euros in foreign exchange reserves, which is around 50% of our GDP. And we need both. We need long-term return and diversification. We are gradually increasing our stock holdings to boost our expected return or expected income. And at the same time, we need to reduce volatility. And for that, we need an asset with a zero correlation to stocks. And that asset is gold. And that's the reason why we are buying gold.
How much more will you buy?
Okay, so in the next four years, right now we started with a storage of 8 tons of gold, almost nothing. Right now we have 20 tons. Or 24, or something like that. Right now we have 40, we have 40 right now, and we will have 100 in the next, I would say, 3 years.
That's very impressive. Governor, thank you so much for joining us today on Bloomberg. That was the Czech Central Bank Governor Ales Michl joining us for an exclusive conversation. Now, coming up, we'll discuss the potential international ramifications of the upcoming Trump presidency. We'll be live in Budapest speaking to Benjamin Haddad, the French Minister for European Affairs. In London, we'll also bring you a conversation with the former UK National Security Advisor Mark Sedwill. That's next, and this is Bloomberg. Welcome back, everyone. Now, Donald Trump's election win is set to reshape global affairs. Joining us now is Mark Sedwill. He's former national security advisor during much of Trump's first presidency. He's also chair of Rothschild & Co. Geopolitical Advisory, and he's in the House of Lords. So, Lord Sedwill, thank you for joining us. I mean, this is a week where so many people are trying to figure out what Donald Trump means for foreign policy, what it means for security, what it means for Ukraine, what it means for, of course, the Middle East. What do you think the biggest change will be?
I think we'll see there are sort of 4 areas which we can expect really significant change. Immigration, probably primarily an issue for the Western Hemisphere, for the Americas. Economy and trade, the tariffs, the deregulation, the subsidies to US business. That's going to affect all of America's allies as well as their adversaries. We'll also see them bring the United States out of the climate change accords. And then the rest of the world will have to work out whether that architecture can continue. And, of course, security and defence. And there, not only do we need to think about the acute problems of Ukraine and the Middle East, but the wider issue of the relationship between the United States and allies needing to do more to protect their own security and defence.
And we've heard it from Emmanuel Macron a number of times, saying, look, we can't really rely on the U.S. as allies as we had in the past. We have to forge our own path ahead. But is Donald Trump going to look for a deal with NATO? So will he support NATO as long as European countries pay more into, I guess, the common treasury? Or does he just almost want out?
I don't think we know exactly, and certainly there are some in the Republican Party who just want out, as you say. There's a sort of strong strain of isolationism, but that hasn't ever really been his position, and it wasn't his position in his first term. He wants a deal. Famously, he wants a deal. And so he does want NATO countries and all of America's allies, those in the Pacific as well, to contribute more to our collective defence. He feels it's unfair for American taxpayers, in effect, to subsidise the defence and security of other countries. He may want a deal that encompasses trade as well as security and defence. He's talked about that in the past. But what there is no doubt is that if we want America, under this administration or indeed future administrations, to stay invested in the defence of Western Europe, in the defence of America's allies in the Pacific, those allies need to step up and do more for ourselves as well, and more for America's defence in doing so.
Has the world, from a security perspective, become more safe under Donald Trump because no one really knows what he does next? So maybe China, even Russia, sit up and take notice, or has it become more unsafe under Donald Trump?
I don't think, actually, we should overestimate the impact of individuals. Of course, the President of the United States is the most important job in the world and certainly the most important actor in all of this. But actually, the fundamentals are continue essentially no matter who is in the White House. So, would Putin have invaded Ukraine if Donald Trump were in the White House? Of course, President Trump says no. We just simply don't know. The crisis in the Middle East almost certainly would have happened in any event. And so, of course, he'll make a difference, but the fundamentals, the US-China relationship, the crises around the world, the resurgence of non-alignment in much of the world, many of your listeners and viewers in places like India, Indonesia, Brazil, etc., those things are happening anyway, and those are long-term trends.
how should the UK deal with the US president? Again, the UK and the Prime Minister was one of the first ones to congratulate him. There needs to be some kind of trade deal. But the UK and the US doesn't always see eye to eye when it comes to dealing with China and Russia.
No, we don't. We have our own national policy. The United States is a continental economy, a continental structure. America first can work for the United States. The UK is the most open, probably, economy and society, certainly among the most advanced economies. So we have a different national interest. By the way, President Trump respects different national interests. He understood that first time around, that our interest was different to his. In the end, you have to do a deal. You have to have an open, frank, sometimes quite tough conversation with him about what our interests are, what his interests are, and then reach an agreement, reach a deal.
Lord Sedwill, let's also go to actually Budapest, where we're speaking to one of the most, well, the newly elected, actually, French EU minister. European leaders are meeting in Budapest, and they're exploring ways to bolster defence spending as well as boosting EU competitiveness. Our Ollie Crook is on the ground with a guest. Ollie.
Yeah, Francine, thank you so much. Yes, we're here in Budapest for the European Council meeting, which has been going on following the European political community, where you had basically all of the leaders of Europe coming together to discuss really the elephant in the room, and that is the election of Donald Trump. And that is exactly where I'd like to begin with Benjamin Haddad, who is the France's EU minister. So thank you so much for joining us.
Thanks for having me.
Obviously, there's been a lot of conversations over the last few days. Can you give us a sort of flavor of what the Europe's reaction is and what the response should be to the Trump presidency?
Well, first, look, I mean, we respect the sovereign choice of the American people. The United States is our allies, and we'll work with President Trump. We have so many common interests. When you look at Ukraine, when you look at many global issues, and we'll continue to work with the U.S. President Macron worked closely with President Trump in his first term. They had a warm conversation the day after the election where they discussed Ukraine and the Middle East. But at the end of the day, and this is what we're discussing here today, the response is within us. This is about Europeans taking more ownership for their own security, reforming their economy, investing in their competitiveness. If we want a more balanced and robust transatlantic relationship, if we want to take our own fate in our hands, we have to look first at ourselves and how we can defend as Europeans, our common interest.
But of course, the great concern among European leaders has been that, in fact, there is not a common interest between the United States and Europe on the issue of Ukraine. In the conversation that Emmanuel Macron had with Donald Trump yesterday, is there any reason for him to feel differently about that?
Look, at the end of the day, let's be very clear. Abandoning Ukrainians, forcing a capitulation on Ukraine would be a tragic mistake for both Europeans and the United States. Giving a victory to Vladimir Putin would send a terrible signal, create a terrible precedent in international relations way beyond Europe, by the way, including on other theaters around the globe that the United States and President Trump cares about. This is clearly what we are saying to our American friends. We stayed united so far. Let's continue to do so. The only way to put an end to this war is to give Ukrainians the means to defend themselves, to rebalance the situation on the ground, which could lead down the road to a negotiation. But first, you need to clearly show Vladimir Putin that victory is impossible.
And we keep hearing from European leaders that even if Donald Trump were to withdraw support for Ukraine, that they're able to go it alone. There has to be, it must be said, frankly, some skepticism around that. What more concretely can Europe do to support Ukraine?
Well, first I want to say, I mean, if you look at the economic, military, humanitarian support combined for Ukraine, actually, the European Union, Europeans right now are doing more than the United States. But
sure,
it's true
but if
that
we've moved.
But you're right that we've moved together combined. This is why we can continue to make the case to our U.S. allies in France that abandoning Ukrainians would be in no one's interest. So let's give Ukrainians the means to rebalance the situation on the ground. But this also, one of the answers to your question is also that we need to continue to invest in our common defense as Europeans. We've increased defense spending over the last few years. Over the 2 terms of the Macron presidency, we'll have doubled defense spending. But we need to continue, and we need to continue to do it through industrial cooperation, invest in our own European industrial base, because this is the question is how do we build our strategic autonomy to be able to defend our own security, take ownership, because the truth is Democrats, like Republicans, have also signaled to Europeans that they want them to do more.
And Trump has suggested that he may, in fact, speak to Vladimir Putin. Is this a moment where Europe, Emmanuel Macron, needs to think about re-engaging with Vladimir Putin? Is there not the possibility that if this is just a conversation between Trump and Putin, that basically Europe is excluded from any solution in Ukraine?
No decision about European security should be made without Europeans and without Ukrainians around the table. But this is
so
a wake-up call.
Should they re-engage?
This is a wake-up call for Europeans. I mean, we need to, once again, we need to understand the world that's rising around us. We see the United States, we see China, we see the Russian threat at our border and the aggression against Ukrainians. And this is why, once again, this is something that we've been saying for the last few years since the Sorbonne speech with President Macron. This is a moment for European sovereignty, alongside our allies in the United States, but European sovereignty, investing in our economy, investing on our trade tools, stop being naive about the threats and the challenges around us, and give ourselves the means to defend ourselves.
So does Europe need to adopt a Europe first approach?
Well, yes, we need to protect our interests. We need to protect our industry. You know, when you see the protectionism, by the way, that we've seen with the Biden administration as well.
Sure.
When you look at the IRA, when you look at the continuation of certain trade tariffs on things that go against European interests, we're the first trading bloc with each other. So we have an interest in continuing to do so and going against protectionism. But when you see those protectionist trends, well, we need to give ourselves the tools to defend ourselves. We've done so, by the way, recently with Chinese electric vehicles.
Sure.
We've stopped being naive.
By the way, that took a year, and right now we're in a position where frankly, Emmanuel Macron is not as strong as he was, in the first Trump administration. Germany's government has just collapsed. Is there the political will, just very quickly?
Yes, there is the political will, because you actually see greater convergence than ever among European leaders to do so. I think the mood is quite different than in 2016. You see our allies in Europe, making the case that we'll work with the U.S., but we need to take more ownership. Prime Minister Tusk recently said the era of geopolitical outsourcing is over. So now, let's put the things in motion. When you look at investing in our competitiveness, unifying our capital markets, supporting our defense industrial base, and taking ownership for our fate.
Great. Well, Benjamin Haddad, thank you so much for your time here, speaking on the sidelines of the European Council meeting here, where in front and focus right now is going to be Mario Draghi and that competitive agenda, maybe a little bit of Europe first to meet that America first.
Always a bit of Europe first. Ollie, thank you so much. Oliver Crook there with the French Minister for European Affairs. We're back with Lord Mark Sedwill. Mark, we were talking a little bit before about, what the second term or the second time that Trump is in the White House means for foreign affairs. What does it mean for, Ukraine and Russia? How should he deal with China to try and get them on board? Because they've been a big backer, actually, of Russia.
They have, but actually what we've seen with all of the crises, fortunately, is this hasn't brought the United States and China into direct confrontation in the way that, certainly during the Cold War, the United States and Soviet Union came very close on several occasions. The flashpoints, obviously, we need to look for in that are Taiwan, the Korean Peninsula, particularly those areas close to China itself. But so far, both Beijing and Washington, and I would expect this to continue under the second Trump presidency, want to stabilise that relationship. It's competitive, it's rivalrous, but they don't want it to get out of hand. In terms of Ukraine, I think, as Benjamin Haddad just said, it is in no one's interests, not in America's interests, not in President Trump's interests, certainly and of course not Europe or Ukraine's, that there is a bad settlement out of Ukraine, that Putin somehow prevails. That would be devastating for global security, because other ambitious autocrats would think military action could be used to change borders, intimidate their neighbours. And that would be a bad outcome not only for us in Europe, but for the United States as well. So President Trump is not going to want to be the president who lost Ukraine. The question, therefore, is how can we work together, the United States, the Europeans, in order to put ourselves in the best possible position for, if there is a peace in Ukraine, a peace settlement in Ukraine, a just and sustainable one that preserves the global rule of law.
But does that have to have some guarantee from the U.S. about, security and peace in Ukraine? And would Donald Trump ever give that?
Well, that would obviously have to be part of any kind of negotiation. We couldn't leave Ukraine essentially on their own. If there is some kind of peace settlement, a ceasefire, a line of control, whatever, we couldn't leave them on their own. Indeed, what we know is that if we did that, Putin would use any pause in the fighting to regroup and prepare to go again in a few years' time. So it would be even more important to lean into giving Ukraine the wherewithal to defend themselves, to deter future Russian aggression, even if we can find some kind of peace settlement in the short term.
Can the U.S. and China go from frenemies to partners?
I think there's going to be elements of both, actually, and that was true during the first Trump term, and it's been true during the Biden administration. There are areas where they cooperate and collaborate. Actually, they work quite closely in order to avoid a crisis in the Korean Peninsula back in 2017. 2018. They're clearly going to be highly competitive in both economic and political spheres. That's become more so over the past few years. But As we said, President Trump is a deal maker. He's threatened 60% tariffs on China, but he may decide that he also wants a trade deal with China because the United States and Chinese economies are still highly integrated. They're disentangling in defense, in tech, in sensitive areas like that, but still highly integrated. And he doesn't want to boost US inflation by imposing tariffs on China that actually harm American consumers and actually damage American jobs.
What do you think will happen in the Middle East? And actually, a lot of people believe that Donald Trump will give a complete free pass to Benjamin Netanyahu, but also next 3 months, where we don't have the inauguration yet, and Joe Biden's a lame duck, seem to me very delicate.
Of course, they're very delicate. The situation in the Middle East is really dangerous. So far, Israel and Iran, partly because neither wants it, have avoided all-out conflict. There's been this exchange of military action, but it hasn't escalated into all-out conflict, and there's no sign really that either side wants that. The Israelis do not have the military capability on their own to dismantle the whole Iranian nuclear threat. The United States would have to be involved in that. And again, there's no sign that that's on the agenda in the short term. But the situation remains highly volatile. It could escalate. There could be miscalculation. And that's true now, but it will be true in the future as well.
Thank you so much for joining us on a very big week where a lot of people are trying to figure out actually what happens next in terms of national security and international foreign policy. Mark Sedwill, former UK National Security Advisor and chair of Rothschild & Co. Geopolitical Advisory. Up next, we look at the markets. There was, again, some big news out of yesterday from the Fed. Chinese stocks currently dropping after we had a bit of disappointment in terms of that bazooka coming out of the National People's Congress. Up next, Bloomberg Brief, Danny Berger, Manus Cranny in New York, and this is Bloomberg.